Hello and welcome to European Digital Week. This is Subhasis Das connecting from India, and I hope that you and your family is doing well because we have went through a lot in 2020 and 2021, and I really hope that 2022 will be different. So today I'll be speaking on blockchain and how blockchain is changing the world. So, before we start, let me have a quick introduction about myself. So, I have been working with some of the most innovative companies in the world, like IBM, which files the largest number of patents in a year, Maersk, which is the largest shipping company in the world, Philips, which is trying to bring in innovation into the healthcare industry. And presently, I am working as a finance manager in Cargill, which is a market leader in agriculture and different kind of uh, biotech products. Uh, so by qualification, I am a CMA, I am a certified Bitcoin professional and a blockchain developer. I have written two bestseller books, designed few innovative educational apps that is helping the finance and accounting students to learn better. So I have only 15 minutes to discuss about this vastly complex topic, blockchain. So I'll not be able to touch upon the all of the different aspects of blockchain. But one thing I can promise to you that after finishing this session, you will be having some takeaways that you can for your further learning in your blockchain journey. So these are the learning outcomes. You will be learning about the basics of blockchain, types of blockchain, blockchain SWOT analysis, and blockchain revolution. So let's start with the basics of blockchain. Uh, let's take a simple example. Like suppose Bob wants to send $100 to Murphy online. So before 2008, there was only one way to do it. They have to depend on banks and financial intermediaries. That is why I'm mentioning here it is a peer-to-bank to peer network because Bob and Murphy are peers here and the bank is sitting as an intermediary. Let's assume that Bob and Murphy are maintaining their uh, bank accounts in the same bank. So what the bank will do, it will reduce Bob's ledger balance and it will increase Murphy's ledger balance. So if you see, banks and financial intermediaries, they just work as a trusted bookkeepers. So I have taken bank just as an example, but there are millions of intermediaries between you and me if we want to do some kind of transactions of value. These intermediaries can be government bodies, financial institutions, credit card companies, tech giants like Google and Facebook, online marketplaces that connects buyers and millions of sellers like Amazon, legal bodies. So the point I am trying to make here that any transaction of value that must be recorded in some kind of ledgers. For example, uh, let's understand what is a ledger. The ledger is nothing but a log of data. Okay, it's nothing but a, you can think of it as a notebook. Only now, after the digital revolution, we are using the databases. Those are ledgers. So ledgers are really important because they create institutional facts. So, for example, this house exists. It is a brute fact. But my ownership of this house is not a brute fact. It has to be recorded in some kind of ledger. Okay. We'll see what kind of ledger it is. So for example, suppose I brought this house. What is the first thing I will be doing? I'll go to the registry office and I will enter my details into the records of registry office. The record of register office is a centralized ledger, a trusted ledger. If I want to transfer my house, again I have to record the transfer in the records of registry office. Similarly, if we want to execute any kind of contracts, we have to depend on many intermediaries like lawyers, government agencies. Even for our identity, we have to depend on some kind of centralized ledger. Like suppose your name is not appearing in the citizen database, you are in bad luck because you will not be considered as the citizen of this country. Ledgers also give a confirmation of status and authority. For example, let's take a simple thing like how do you know that you passed or failed in an exam? You have to check the records of your university. And regarding the authority, we can say that the constitution of a country is also a ledger because it gives authority to states and center, to MPs and MLAs. So ledgers are really important. And if you see, all these ledgers are maintained by certain trusted third parties or intermediaries. Why? Because suppose I want to sell a car to you and I note it down in my notebook, you will not believe on my notebook. That is why we have to go to the RTO office, or we have to record the details in the transportation department's record, because we trust the transportation department. So it acts as a trusted third party. So the ledgers maintained by these trusted third parties uh, are called centralized ledgers. So the crucial point here is we have to trust these intermediaries and their ledgers, and this trust comes with a cost. Let's see what are the costs. Like the centralized ledgers are maintained in centralized databases. So whenever a pile of data is stored in a single place, it is prone to attacks. Like there can be cyber attacks, system failures, physical destructions. We lost our data. Similarly, we trust these intermediaries to keep our private information safe. Remember, while you opened a bank account, how many details you have to provide? You have to tell your name, your father's name, your spouse name, where you are staying, what job you are doing, what is your date of birth. So all these are private details. Uh, those should be kept secure. But as we have seen over the last 2 decades, there has been huge data breaches. Similarly, identity theft is a major issue because we provide our identity to these trusted third parties, and obviously they try to secure it, but because of the nature of their centralized databases, there is always a risk of uh, leaking the data, leaking the identity information and all. Next thing is censorship. For example, if you are using Twitter, if you don't follow their guidelines, if you have a different kind of opinion, they can just remove you from their platform. I think they have done it for the last American president also. And the next thing is, whenever we are keeping our money in the bank, we trust the bank that it will be managing its finances well and it will not go bankrupt. But still, it is a trust. It can go bankrupt. The thing is, there are huge transaction costs also. Just because of record keeping, these intermediaries charge huge transaction cost. Suppose you want to make a cross-border transaction, you have to pay huge fees. Then there comes the legal cost. So whenever you introduce a third agent, between the transacting parties, there is always a chance of third party risk. So those kind of disputes increase your legal cost. Lastly, corruption. So when power is centralized with few people, it's human greed. They can manipulate information. They can change the details, bribery, changing the details, selling your private information, misrepresenting the financial statement, all kind of corruptions. This is the cost of trust we have to pay. So what is the need for trusting these intermediaries? Because there are many costs that are involved. Uh, so this begs a question that why do we trust these intermediaries? We trust these intermediaries because we can't trust each other. Yes, we can't trust each other in transactions of value because assets, they don't work like information. For example, after this internet revolution, it is very easy for us to send information across the globe. Like by one click, we can send documents, mails, videos, photos, everything. But all kind of digital set, or if I can say, all kind of digital things, they can be infinitely copied. But when you come to assets, for example, money, you don't want it to be infinitely copied because money has to be scarce. The assets should be limited because resources are limited. It is not unlimited. But if you look at the uh, digital resources, they can be copied infinitely. That is why we need an intermediary for all our digital transactions so that nobody can make a copy of transactions. So suppose in the previous example, we have seen that Bob has sent $100 to Murphy. He should not be able to write another entry into the ledger that he is spending the same $100 to Lindy. Then that will be a double spending of the same $100. It has been called famously the double spending problem. And until 2008, nobody had found a solution for double spending problem that is without involving the intermediaries. So the question, the challenge is, can we create a mechanism where we don't need to trust any intermediaries for verifying our ownership and transfer of assets? So in 2008, we have invented the trust protocol or blockchain. The first application of blockchain was Bitcoin, the famous cryptocurrency, and it was developed by a pseudonymous person, a shadowy kind of figure called Satoshi Nakamoto. We don't know. He is still some kind of mystery. So, what is blockchain? So, Mr. Satoshi, while introducing the prototype of blockchain, wrote in a CryptoPunk forum that I have developed a new open source P2P CAS system called Bitcoin. It is completely decentralized with no central server or trusted third parties because everything is based on crypto proof instead of trust. So basically what he is telling that the transaction will be happening cash to cash without any intermediaries. There is no need to trust any intermediaries. So what is blockchain? Blockchain is open source software. Anybody can download, run, make improvements to it. It is a distributed ledger. So a copy of database is available with millions of nodes, millions of computers, or even if it is not a million, thousands of computers. So in case of bank, the details are stored in a centralized ledger, which is prone to single point of failure. But in case of distributed ledger, since it is spread across a network, even a single computer fails, it doesn't affect the whole blockchain. So the next thing is it is a decentralized network, like it is managed by a mass collaboration. It is a bunch of people who come together to manage the things. They bring their own individual computers, they connect with through a open source software. Nobody controls the network, everyone has equal right in the network. They verify the details, they update the details by connecting with each other. Secure and immutable, because transactions are recorded in batches called blocks, and they are linked to the previous block through a cryptographic technique called hash. Think of hash as a fingerprint. So any digital document is having a fingerprint. So the previous block hash will be included in the current block hash, and the current block hash will be generated. So if there is any detail which is changing in the previous block, it will change its own hash. And since the hash is linked to this present block, present block hash will be changed. Again, all the subsequent blocks will be changing. So any change anywhere in the blockchain will be noticed instantly. Moving to next, let's go back to Bob's example and how he will transfer the $100. Let's say he's transferring 100 bitcoins. BTC is the short form of Bitcoin. So he'll be using a peer-to-peer network. Here there is no bank. So everybody is peers, everybody is having independent computers. They will be maintaining they will be recording the ledger in their own databases. I'm mentioning as blockchain, and everyone will coordinate with each other to update the ledger so that it is correct. Okay. So the blockchain transaction process will happen like this. Bob will initiate the transaction through a wallet software. It will broadcast the transaction to the P2P network, and there will be some mining nodes. Mining is nothing but verifying the transaction and adding it to the blockchain. So these guys will be competing with themselves to create a block of transactions. Once a valid block is created, then it will be transferred to again the P2P network, and they will be verifying it. And since these miners have spent substantial resources in the form of electricity and computational power, they will be rewarded with new currencies. And this new block will be added in the blockchain, and the updated blockchain will be circulated with the network. So here you can see the block structure. You can go through it by yourself by pausing the video. But one thing I want to see, show you here actually the previous block hash. So the block hash, here you can see hash of the previous block header. It is included here. The hash of the previous block is included here. So if anything is changed in the block one, it will change the block hash of block one. And since its hash is included in block two, it will change the block two hash also. Will change the block 3 hash also. So the change will be apparent and everybody will be noticing it. So types of blockchain we are having, like blockchain is like a ledger only. So we'll classify it on the basis of read, write and commit transactions. There are two types of blockchains, like public and private. Public blockchains, which we have discussed now, like Bitcoin blockchains. So there will be two kinds of blockchains within the public, like permissionless and permission. The permissionless blockchain is totally decentralized. Anybody can join, read, write, and commit. It is hosted in public software. People can remain anonymous, but it is very low. It has very low scalability. Permissioned blockchains will permit some people to join and read, but it will not give them right access. Private blockchains are very good for organizations, business entities, because they don't want to disclose everything to public. And in permissionless, the restrictions are less, and the permission, definitely the restrictions are more. So here are few examples of public blockchains, that is Bitcoin, Ethereum, DAS, Factom, and here are the attributes of public blockchains. They are completely decentralized. They are having a public ledger open to everyone. They're censorship resistant, that nobody can shut them down. People are anonymous. Moving to next, we are having enterprise level blockchains. Like it is suitable for business. Here, people's privacy is important, not anonymity, because everybody knows everyone. Provenance tracking is easy, so you can track the transaction to its roots. Single shared ledgers with multiple stakeholders can be maintained. Transparency and legal disputes, better coordination, value creation can happen, because there will be less dispute, because one single ledger will be maintained across all the parties, so the chance of legal disputes will be less. So blockchain SWOT analysis, I just wanted to show you the strength, weakness, opportunities, and threats of blockchain technology. And here you can see the strength, that it provides decentralization, it shifts the control from a certain group of people to the masses, and there is no single point of failure. It is open source, highly secure. Asset provenance can be tracked, asset history can be tracked, dynamic and fluid value exchange, for example, tokens, cryptocurrencies. Opportunities are a lot. Like value innovation, you can create new kind of like tokens, you can create new kind of decentralized organizations. Reduced fraud, obviously, reduced legal and audit cost, new business models are possible, reduced financial intermediaries, reduced third party risk. Weaknesses are still there is very few blockchain professionals, so skill scarcity is there. Lack of trust due to new technology, which is obvious. Uh, Customers are unfamiliar with this new technology, so they don't have a good user experience. Wallet and key management is essential, but I will not be covering this wallet and key management here. Scalability is a big thing. Like public blockchains, they face huge scalability issues. Like threats will be your legal and jurisdictional barriers, because there can be laws which can prevent you from making cryptocurrency transaction. Political diplomacy can play a great role as a threat. Poor governance, because there is no law, there is no nothing. So if you are if you are defrauded by the system, nobody is going to help. So lack of legal structure, there is no legal structure or law now. Moving further, let's go to the blockchain revolution, and you can see that blockchain is revolutionizing the public services domain completely. That you will be in future, you will be seeing your public records, your land records, property records will be saved in blockchain. Digital certificates, educational, death, birth marriage certificates will be saved in blockchain. Pharmaceutical supply chains will be possible, like a blockchain enabled e-sign possible. Identity management, because for the identity we depend on the third parties, blockchain can provide the identity uh, uh, in a more uh, transparent way. So power distribution, duty payments, tax payments, agriculture, and other supply chains, e-voting is possible, because many times we think that voting is manipulated, but with blockchain, the voting will be totally immutable. So electronic health record management, nobody can tamper with your health related data. Digital evidence management system, this is good for your investigating agencies. They will have a good evidence tracking system. Public service delivery will be improved. So next part is automated contracts. Like contracts are the backbone of any kind of business dealings. So here the automated contracts will be like the terms and conditions will be coded in a software, and it executes automatically whenever the conditions are met. So it is stored within the blockchain, that is why it is immutable, it is distributed, and it eliminates the needs of mediation. For example, suppose you are starting a crowdfunding project, and the contract is written in a code and available to all the stakeholders. If you meet the goals, then the contract automatically transfers the fund to your production team. But if your goals are not met, obviously the contract itself will transfer back the funds to the supporters. So a new kind of accounting. First, there was single. Let me take a quote of UG actually. So first, there was single entry system where we are writing down what happened. Okay, like I brought a car. Like then the double entry system came, like because of Luca Pacioli, and there we have to explain the reasoning behind the I brought the car, for what, like for credit or for sales. So this kind of things called double entry bookkeeping, and here you can see the problems with this kind of system, because here you can see participant A, participant B. They're having two books separately, and there are bank records, auditor records, regulator. And so everybody is having their own records which are not connected with each other. Okay, so it makes the system very inefficient, expensive to maintain, and these are like single point of failures, so they're vulnerable to threats. Okay, so the problems with present day accounting systems, like since it is a centralized management breeds corruption. For example, Enron, WorldCom, time consuming and costly to maintain. Obviously, single point of failure. Obviously, reconciliation and legal dispute, since ledgers are maintained in different entities. You have to reconcile your transactions with other parties. Corrupted audit system, as we can see, many like big four firms are involved in this kind of corruptions. Human error is obvious. Lack of transparency. The solution is to have a single database spread across multiple organizations, multiple stakeholders, like maintain a single record which will be accessed by banks, insurance companies, auditors, regulators, your counterparty to with whom you are transacting. So all the counterparty party transactions will be recorded within the blockchain, so that it provides a immutable proof of facts which happened. Next, I'm moving to the last part of this section, that blockchain helps in effective supply chains. Suppose you brought a apple in your in your grocery store, and like it claims that it is a very organic apple, but how would you verify? Because if you see the supply chain, the apple comes from a farm to processor, distributor, and every point there will be few documentation which is created, and these documentations are not properly tracked. Okay, suppose we track these documentations in blockchain, within few seconds we can know the like from which farm the apple came. So suppose I eat the apple and got sick, we can know that at which point of time some kind of toxins or insects or bacteria affected the apple. So this kind of things can prevent pandemics from spreading. So I wanted to talk about many more things, like the tokenomics, the decentralized organizations, and IoT, and there are a lot of things. But since I have 15 minutes, I just have to wind up here. So thank you for joining me.